Prashant, typically when fear is no longer occupying center stage, risk-on trade is making a comeback, we are hopeful of an economic recovery. Typically when the economic recovery starts, what happens?
No, but I don't think anything happens. I think same things continue. I mean, I've seen 3 economic downturns in India, but I think sectors which benefit from economic growth will do better. But I think, see, you must appreciate that last 4 years what has happened is that the tax regime and the subsidy regime gave extra money to the consumer, almost 4% of GDP. He referred to very high fiscal deficits. And that is going to revert. And tax rates will go up, tax collections will go up. FM said yesterday that he is targeting 20% annualized growth in taxation, that is more than nominal GDP growth. Subsidies will reduce. We have seen diesel being decontrolled in a controlled way. If that journey is completed, then it is 1% of GDP which is going out of the consumer's pocket into government's pocket. So I think to my mind, consumption will disappoint. And we are seeing that if you look at the results of Hindustan Lever, I mean, it started with cars, moved to two-wheelers, moved to garments, moved to discretionary, non-discretionary products like noodles or things like that. Look at Nestle's volume growth last 1 year, and Levers delivers you 5% volume growth. So I think it is telling us something that the consumer at some point is feeling the pinch. And I think, therefore, coming back again to the same point, that is where the expectations are the maximum, the multiples are the maximum. And that is where I think the disappointments will lie.
You know, markets are all about opinion. Prashant is of the view that consumer stocks are expensive, Indian consumer is slowing down. We've seen double-digit inflation for 3 years on the trot now. But Ramesh has argued on various forums that consumers are the leader of the next bull market. Why is that? Now, Prashant is making valid points. I'm not interested in kickstarting a debate, but we're just trying to understand opinions here, because markets are all about beautiful opinions.
Yeah, no, see, every bull market has a hypothesis, all right? You have to have some intellectual hypothesis. What did the 92 bull market teach us? That India was going to become economic liberalization was going to start. In April 92, the liberalization started after that, but the market tends to be ahead. What did the 2000 bull market teach us? The 2000 bull market taught us that India is going to be a technology superpower. Yeah, that's true. So much of us employed in technology, in IT services, in IT-enabled services. What is this bull market telling us? That thing we just think we're just starting. It's telling us that India is going to join the league of middle-class nations. That a population which is now maybe 5 crore people in the middle class will become 50 crores in a period of, say, that 5, 10, 15 years. That an economy which is a bit over $1 trillion now, maybe $1.5 trillion, will become a $4 trillion economy over the next 4 or 5 years, right? Which is a powerful statement to make. You know, 50 crore people getting into the middle class will want entertainment, will want to consume, will want better education, will want more two-wheelers, will want better standards of living. That is the opportunity size we see in India, that India joins the rank of the middle-class nations in Asia, that India will go from being a third world country to the third largest economy in the world, and the investment hypothesis is based on that. Yeah, stocks are going to get... One of the things I've learned is you don't try and second guess the market's valuation. You don't try and say, oh, Infosys at 23p is very expensive. Infosys went to 100p. Rather than try and figure out when to time this market, I don't believe in that. I believe that I want to hold stocks for the duration of the bull market.
What's a big opportunity? I'm using the word opportunity because let's break it down in terms of a theme, in terms of business, in terms of a size.
No, I continue to be very optimistic about consumer businesses, because if you believe that country is going to be 3 times and 4 times as big as it is today, then it is not going to happen without many consumer businesses getting much larger than what they are today. Temporary overvaluation or temporary adversity in a growth rate should not dissuade us and give away something which is valuable. So it is conceivable that some businesses, like Prashant mentioned about Lever, struggling on in terms of getting a superior growth rate and all of that, that's bound to happen. In any journey, these wobbles are going to occur. But I don't think that should dissuade us from assuming that these businesses have run the course, or their valuations have touched the finale, or the opportunity is extinguished. I don't believe that any of them is the case. So I would think that if the country is going to grow while some amount of money topically may have been taken away from subsidy pockets to the from the pockets of consumer into the hands of the government or whatever. But if country is not going to grow without income going to grow, and if income is going to grow, there will be some more money in the hands of people to afford that consumption. So I remain very bullish about that. I think pharmaceuticals is an incredibly large opportunity, and unlike the research-based pharma, which is something which is dangerous, and what dangerous in a sense, predictability of that is very dangerous. You can't really predict when and what is going to work, especially given the upfront expenditure, long time frames, and massive amount of money to be put, and success or failure not being predictable, makes it a very dangerous model, not akin for public market investing. But Indian pharmaceuticals, much like Indian software 20 years back, people said Indian software is technology, and that's farthest from the truth. It's not technology. Of course, there are code writers and programmers who write codes and palm it off to their customers, but really it's a bread and butter service. It's an intellectual arbitrage, or some people have derisively called it a low labor cost arbitrage. But whatever it is, it's large, it's successful, cash flow creating, and very rich business to work on while the growth lasted and while the growth remains. So equally in pharmaceutical, the Indian models are very hybrid variety. They are not the risk models of the kind that Western world is now facing, where they own proprietary technologies, but they do not have a capability to take that forward and incur the past budgets, because they've seen that large budgets and very little output. And so they are struggling with their business models. This is where I think Indian business is a very immense opportunity. Local market is healthy, large, and will keep growing, especially considering the such poor care and such poor attention to the healthcare in this country. And most people have to fend for their healthcare from their own pockets rather than having the benefit of a public program. So this is one business which has local opportunity for the innovative players who can invest reasonable amounts into innovation to create differentiation, have an immense opportunity in the international markets also. It's not going to be trouble-free every quarter with a predictable mechanical regularity, but I think many businesses would get much, much bigger than what they are today. I mean, 15 years back, it would have been very hard to think Sun Pharma would have been a 75,000 crore market cap company that it has become today. But it has. And if things run the course the way they are, I think the opportunity for many businesses is to be several times over. I remain very bullish on banks, select finance businesses, because finance is a mother business. It's a precursor to the growth of GDP. And usually it's a force multiplier. So for a unit growth of GDP, you get much more than 1 unit of the growth in the finance business. And it precedes the growth of the GDP. So it's a lead indicator and not a lag indicator. So I think many finance businesses are going to do wonderfully well. It would be very hard for somebody to believe that a relatively tiny firm like Gru Finance would have compounded profits at some 37% over a 10-year period, and would have generated economic return, investor returns of some incredible 48% over a 10-year period per annum.
Still growing.
And still growing. So there are so many businesses, rich businesses, rich business models which have opportunity to multiply and multiply and multiply. Where have we got in this country if we are going to be a country of 5 trillion and 7 trillion? Do we have one Goldman Sachs? Do we have one Morgan Stanley around? Do we have one JP Morgan? I mean, our biggest listed finance firms in that kind of a space are still doddering at about 1,500 and 2,000 crores and 2,500 crore market cap. So at some stage we are going to see far bigger firms than this in these space.
In the same light, when India, the GDP of the country is growing from 1 trillion to 2 trillion, from 2 to 4 and 4 to 6, what's your big idea?
Compound interest is the 8th wonder in the world. That's what Einstein said, and I think Sensex of 100 in 1979 has become 20,000 today. And So I think that's the big idea, that India's GDP growth is going to be very healthy. It will create meaningful real returns. And key is how long you stay invested in the markets and what percentage of your wealth is in equities. And I think, as Ramesh said, that Indians are chronically underinvested in equities. So, I mean, that's what the big idea is. And consumer may underperform for 1-2 years or something else, or one may be right or wrong. But key is the markets themselves are delivering you 15-17% CAGR returns. And that returns over 10-20 years, particularly for a very young audience, makes a very, very large difference. So I think asset allocation is the key, and right understanding of equities and long-term view, I think that is the big idea to go.
So let me wrap up the panel discussion with a very famous quote from India's most famous investor, Rakesh Jhunjhunwala, that the best for India is yet to come. Investing in Indian markets is like eating a buffet. You can pick and choose. And if there is a beautiful girl, she will always find a suitor. Which is, if a business is creating value, somebody will buy it. Ladies and gentlemen, thank you very much. Let's put our hands together for this lovely panel.